representative from LGFA, beg your pardon, Andrew, and ask you to present your report. And I understand that you've also got a presentation for us. Amy, are we going to be managing that for Andrew, or Andrew, will you be doing that from your end?
I'll try and share my screen, so I don't know if that's working for you.
Perfect, thank you. And we are in your hands.
Okay, thank you very much for the opportunity to present.
Sorry, could you share it as a PowerPoint rather than just the screen as it looks to you, because it's a bit small?
It's actually on the presentation. It's under presentations at the end of the agenda.
The one that's headed Statement of Intent on the first page.
No,
the one before.
I was looking at the presentation.
You got it? Which one?
You'll find it on page 194.
Different from the...
Page 194, Councillor Dave.
Oh, okay, that one. Right, okay. Sorry, I was looking at the attachments.
Thank you, and back to you, Andrew. Thank you.
Okay, so just the profit to the 6 months to 31st of December was $5.9 million, and that's sort of consistent with profits in previous years and the profits when we sort of project forward. But I'd just like to reiterate that, you know, the view of the LGFA directors is that profit is not the primary objective of LGFA. The primary objectives are, you know, the certainty of financing for councils and the cheapest cost of financing for councils. And in the past few years, what we've seen is quite a lot of volatility in financial markets and quite a lot of global uncertainty. So we've had the impact of COVID, we've had the global inflationary pressures and central banks now starting to increase interest rates. And lately we've had the war in Ukraine. And that's created a risk aversion. So, for example, you know, we don't know if, like, for example, China started supporting Russia, that suddenly, you know, we would be prohibited with trading from China. And so your financial outlook for something like Fonterra would just change overnight. So you can see why investors are incredibly concerned about risk. As a result, we've been holding around $2.5 billion in liquidity. Several years ago, we used to hold 500 million. Holding all that liquidity carries a financial cost to LGFA, but it's something we think is prudent to do because holding large amounts of liquidity enable us to create certainty in providing councils with financing over the short to medium term. Just back to page 7, just the performance measures for the 6 months to 31st of December. So one positive one I'd like to focus on is the survey results from our member councils. So we anonymously survey councils each year on their satisfaction with LGFA. So the satisfaction rate was over 99%. So, you know, I'd like to think that our member councils think we're doing well in terms of the, you know, core objectives that we have in terms of financing for councils. The two that we didn't meet, first one is the 80% market share of all council borrowings. Firstly, we now have 74 council members and we have 3 in the process of joining, so that will take us up to 77 council members. The only one we don't have is, or won't have, is Chatham Islands. So we've had incredibly strong support from the sector. Why we aren't hitting that 80% is simply due to Auckland. So Auckland make up over half of total council debt. If we were providing Auckland with all their financing, we'd end up with something like 60% of our lending to Auckland. And S&P just don't allow us to lend that much to Auckland without it impacting our credit rate. rating. So that means that Auckland have to finance around 2/3 of their borrowing in their own name, and that is where the other 20% of lost market share is coming from. It's simply Auckland financing what it can't get from LGFA in its own name. The second objective we haven't met is meeting with all our council members each year, and that's simply an impact of COVID. So we are doing Zoom meetings and telephone calls with the member councils, and as soon as we can get back out and do face-to-face meetings, we will. So hopefully that can occur in the next sort of couple of months. In terms of our SOI objectives, so page 4 of the presentation, in this year's SOI, we've reformatted the performance targets. So we used to have primary targets and secondary targets. In terms of our business objectives and financing objectives on page 4, they are the ones that we had previously, but they've just been recategorised into those two sections. The ones on page 5, we've added some new ones into the environmental section. So that's reflecting the changes that are occurring in the sector, both in terms of reporting and the likely ongoing, I use the word pressures, but the ongoing requirement for councils to do more in the climate change and sustainability space. So we've added that in because we see our role as trying to assist councils through that sort of process. And in the presentation later, there's a couple of examples of green and sustainable lending that we have done in the last 6 months with councils. And also just the last section, industry leadership and engagement. So when we started out, we really saw our role, really as just as providing that financial lend to councils. We've now sort of expanded that role to sort of trying to take a leadership and engagement role and assisting the councils through changes that are going on in the sector. And as you're all well aware, there's significant changes in terms of the three waters, in terms of RMA reform, the future of local government, the impact of COVID. And so we see our role as trying to support councils with any changes that are going on in the sector. So I will stop there, and maybe just one other thing. Just one other thing that we've done is a future director role. So again, that's just trying to take some leadership within the sector so that we can enable someone from a younger person or someone with directorship, governance that wants those sort of experience to sort of gain up through creating that sort of future director thing. So again, it's just sort of leadership role and trying to upskill someone from within the sector. So I'll finish there and happy to take any questions.
Thank you, Andrew. I do have a question from Councillor Rob.
Thanks, Chair, and thanks, Andrew, for your presentation. I wanted to ask a question. I note that on your list of borrowers now, you've got one council-controlled organisation, and I do remember in maybe a year ago where the rules were changed to allow CCOs to become direct borrowers. I just want to add a question in terms of what the policy of LGFA is for lending to that CCO. Is the lending constrained to the overall debt to revenue ratio of the CCO owning council, or are you, or is the organisation lending as it might do on the basis of debt to, equity, equity to debt, equity to total assets.
Yep, no, good question. So to date, the only CCO that LGFA lent to is Invercargill City Holdings. So we've lent 90 million. We currently have 3 other CCOs that we're in the process of negotiating with or have applied to join. So that's Dunedin City Treasury, the Nelson Tasman are creating a holding company for their commercial operations, and the other one is Westland Holdings. The protections for LGFA is that the council, the parent council or councils, have to provide either a guarantee or, in the case of a CCTO, they have to provide uncalled capital that would enable any debt that the CCO has to be repaid. So in essence, the council is essentially providing that guarantee to its CCO. So that minimises the risk for LGFA. In terms of the reporting under the financial covenants are measured at the parent council only. However, LGFA also monitors the outcomes at group level, and we report those outcomes both to the LGFA board and to the shareholder council and the councils who are guarantors of LGFA. So we will report those outcomes both at parent and group level, so there's transparency there. If there were any concerns, LGFA is not committed to lend to any council or CCO. So if we felt there was any danger of the covenants being breached, then that would be a matter for the LGFA management and board to discuss where it wanted to go with that.
Okay, so in terms of cutting to the chase, it won't be possible to borrow at the moment 280%. It wouldn't be possible for a council and its CCO to borrow more than the 280% without breaching the council's covenant.
No, that's correct. But when you add the CCO in, it's generally bringing in additional revenue, so it provides a bigger revenue base which to borrow.
Yeah, I understand. You'd redo your calculation. Yeah. Thank you, Chair.
Good.
That's all your questions, Councillor Pascoe? Yes, thank you. Any other further questions from councillors? Just one from me, Andrew. One of the first opportunities we had to meet with you in this triennium through this committee, there was the matter of a appointment to your governance board, and at that time we had a discussion with regard to gender diversity on that board. Apart from the Future Director program, what measures are you taking to future-proof that position?
So, yes, we have the Future Director program, which I've just sort of put up on the slides there. We have the commitment to diversity. The board has had a third-party review of its sort of governance. However, the appointment of directors is a matter for LGFA shareholders. So, perhaps that's a question better directed to the LGFA Shareholder Council.
Thank you. Thanks for your answer. There being no further questions, I'll call for a mover for the motion. Mayor Paula. And seconded by Jadine. Thank you. Is there any debate? There being none, then I will put the motion, and you'll find that motion on page 145. And a show of hands. All those in favour? Councillor Dave? Oh, beg your pardon, thank you.
The motion is carried unanimously.
Thank you, and thank you once again, Andrew, for presenting at our meeting.
Okay, thanks very much.
Kia ora. All right, that takes us to 11, item 11, and that is a resolution to exclude the public. I'll move that. Do I see Mark Donovan with your hand up to second? Thank you. All those in favour? Raise your hand. Against? Carried unanimously. Thank you, and we'll take a couple of minutes to move into public excluded.